The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
We're going to hear about a couple of interesting growth and income stocks now from the editor of our Income Investor Service here at Zacks, Brian Hamilton. So Johnson & Johnson has got some news going on.
Yeah, Johnson & Johnson is the biggest U.S. healthcare company with a market cap of $330 billion. Now, they recently reported earnings where they beat expectations, but more specifically, their pharmaceutical division, which accounts for a little less than half of their total revenue, saw sales increase by about 19%. But the stock price had started to pull back after that because analysts saw competitive generic drugs really starting to eat away at the total profits in their pharmaceutical division. Now, Johnson & Johnson has a decent pipeline of drugs. They have a really good cancer drug and a stroke prevention drug. But management's recent announcement has really started to turn the tide here. They announced that they have about $50 billion earmarked for acquisitions. Now, they're not looking for one giant acquisition. They're more or less looking for a bunch of smaller $10 billion acquisitions. Now, this is expected to replenish their pipeline of drugs, which is going to be really beneficial for the company. Now, management also had two other big announcements. They accepted a bid to sell their LifeScan business, which is their diabetes business, for $2.1 billion. Okay. Now, this is going to close in the end of this year. They also announced that they received a bid for their sterilization products business for $2.8 billion. Now, if they accept this bid, they're going to, this would close in the beginning of 2019. Now, the proceeds from these bids are expected to go into their acquisition pool, which is already standing at $50 billion, their share repurchase program, and their dividend payments program. Now, Johnson & Johnson is exceptionally unique because what they're considered is a dividend king, which means they have paid, increased their dividends year over year for the past 50 consecutive years, which is extremely impressive because there's only a handful of companies that actually can boast that. Now, I want to show you the price consensus graph because it really gives you an outlook for Johnson & Johnson. If we take a look here from the third quarter of 2015, the company's stock price had been a really nice upward trend. Now, when the market peaked in the beginning of 2018, the stock price started to pull back. Now, a lot of other companies have seen a little boost back, but Johnson & Johnson continued to fall. Now, we're seeing a nice little boost back up here as these acquisitions have been announced and the $50 billion pool that they have for new acquisitions. Now, the company pays a really solid 2.94% annual dividend yield. Now, with these acquisitions, this is going to expect it to increase. Up. Oh, it should go up because they're a dividend king. So we're expecting it to go up, but this might go up even further, and they might add to their share repurchase program. And given this new pool, what they're hoping with these acquisitions, this is looking like a really nice long-term growth for the company.
Interesting situation at Johnson & Johnson.
Always, yeah.
International paper, another one that you've brought to the foreground here for this conversation, and their Zacks consensus for current year earnings is up.
Yeah, actually the earnings is really interesting. I'm going to show you guys this a little later on the detailed estimate page. But first, now the recent earnings announcement, they beat both top and bottom lines. They saw earnings increase by almost 60%, but revenues were up only about 2%. While that beat expectation, it really didn't set the world on fire. To combat this, management recently announced that they're increasing pricing across all three of their major paper segments. Now, this hasn't really impacted volumes at all as of yet since this announcement, so the pricing has been doing very well. Now, this is expected to help both top and bottom lines and their overall cash flow. I also are also expecting in the very near term for the company to announce a share repurchase program and or an increase in their dividend payment. Now, their current dividend payment is at 3.3%, which is a really solid dividend payment. Yeah. But as we were alluding to earlier about their estimates revisions here, I want to show you this, their estimates revision page here. Now, I'll show you a company that say, hey, we have estimate revisions over the next 2 quarters, as you can see here, and the next 2 years. But typically, we have like one event that kind of makes it all boost up. But if we look here, we're seeing 60, 90, 60 increases each and every 30-day period here. And this is going across the board for each accounting here for the next 2 quarters and the next 2 years, which is really impressive because the pricing is really taking an impact on the overall company. Now, they currently have a 3.3% annual dividend yield, as we were talking before. They're Zacks ranked #2, and they have a VGM score of an A. This pricing has really been the catalyst for the company as of late, and is expected to continue to help the company all the way through 2019.
Looks like paper is still profitable, even in this paperless society that everybody talks about. Do you own either of these two?
No, I do not.
All right. Thanks for the information.
Yeah, most definitely.
Don't forget, there's more information on these two companies and others on Zacks.com. That's our website. All you need to do to start looking through it is get over to the homepage. With Brian, I'm Terry Ruffalo.